Hello everyone, let's discuss the ledgers, more precisely the general ledger, the purchase ledger and the sales ledger. First, the general ledger is a collection of ledger accounts. These ledger accounts include the sales ledger control account, the purchases ledger control account, the bank account and the VAT account. Let's discuss a typical ledger account. Its date column contains the date of the transaction. Its detail column, also known as its narrative column, contains the title of the other account that holds the second part of the dual effect. It may also have a brief description of the nature of the entry. The optional folio column contains a reference to the source of the information. The amount column contains the monetary value of the transaction, and the title of the account is a name that reflects the nature of the transaction. This is an outline of a typical ledger account. Let's discuss handy rules for how to enter information into the ledger accounts. First, we should remember the golden rule that every debit entry must have an equal and opposite credit entry. We should also remember the mnemonic dead click, which means that debits are increased by increasing the expenses, assets and drawings, and credits are increased by increasing the liabilities, income and capital. Note that if the values decrease, then the columns swap. Now, let's discuss the purchases ledger, also known as the subsidiary purchases ledger, which is a set of accounts for individual payables and the transactions involving that payable. We need to remember that the purchases ledger doesn't follow double entry, and it is a more detailed version of the purchases ledger control account. On the other hand, the sales ledger, also known as the subsidiary sales ledger, is a set of accounts for individual receivables. It also does not follow double entry, and it is a more detailed version of the sales ledger control account. And as ever, thank you for watching.